I still can't get over how much talk there's been about TSMC's Q4 numbers. It's not every day you see a single company pull in $33.7 billion in one quarter. That kind of revenue makes headlines for a reason.
Right, and what really caught my attention is that they didn't just meet expectations, they managed to beat them. In business English, we call that beating expectations or surpassing guidance. That phrase pops up a lot when analysts are surprised in a good way.
It's always fun hearing that phrase because it's like the report card came back with a gold star. But even beyond the revenue, their gross margin just soared to 62.3%. For a manufacturing giant, that's almost unheard of.
Totally. And gross margin is such a key metric because it shows how much profit they keep after paying for all the basic costs of making those chips. It's like seeing how big a slice of the pie TSMC actually gets to eat.
What blows my mind is that TSMC's technology is so advanced, companies like Apple and NVIDIA are just handing them the pricing power. They basically pay whatever TSMC asks.
That's wild, especially when you think about how costly it is to build fabs in the US or Germany. Even with all those massive expenses, TSMC's still raking in serious profits. But you know what really stopped me in my tracks? The CAPEX number.
Oh, absolutely the CAPEX budget. For anyone learning business English, CAPEX is short for capital expenditure, and it's the money spent on things like buildings, technology, and new equipment. TSMC's CAPEX for 2026 is projected at up to $56 billion.
That's more than the GDP of some countries. And most of that cash is going straight into advanced process technologies, mainly for the 2-nanometer chips, which aren't even released yet. It's a massive leap of faith.
Hearing those CAPEX numbers really sets the stage for the big question. Is this another tech bubble forming, or is it just the start of something even bigger? You know, the classic bull versus bear debate.
Let's play it out. If I put on my bear hat, the risk seems obvious. We're spending hundreds of billions on hardware, but so far, software sales are only a fraction of that. There's this $600 billion gap. Where's the return on investment going to come from?
Fair point. But if I'm the bull, I see it as the infrastructure phase of a supercycle. It's like building out highways before the traffic shows up. The likes of Google, Microsoft, and Amazon are racing to upgrade before anyone else, terrified of being left behind.
Right. And that creates a kind of prisoner's dilemma. No one can afford to stop spending, or they risk losing out to their rivals. TSMC calls this defensive spending, almost like building a moat around their business.
And TSMC isn't just guessing here. They're super conservative in their planning. Most of this CAPEX is locked in with take-or-pay contracts, meaning companies like NVIDIA have already committed the funds, whether they use the chips or not.
So, if we look at TSMC's own messaging, the hardware side looks solid for now. The real risk is probably 2 or 3 years out, like, if we don't get a true killer app that everyone has to use, then maybe the bubble really pops.
Exactly. The report keeps mentioning a super cycle. That means a period of unusually high demand and growth. For now, TSMC's 2-nanometer chips are already sold out for 2026, so demand is locked in.
Sold out before the chips even launch, that's wild. But I get your point. The risk is less about 2026 and more about what happens if there's no must-have AI app by, say, 2028. Companies could be left with tons of unused capacity.
I'd keep an eye on that, for sure. It all comes down to whether someone can build that next-level application, something that makes everyone need these chips, the way the iPhone did for mobile tech.
Circling back to technical jargon, there's one more term from the report that's worth explaining. CoWoS. It sounds complicated, but it's all about how chips are connected to memory.
CoWoS stands for Chip-on-Wafer-on-Substrate. It's this advanced packaging method that lets the GPU, the AI brain, talk to its memory at lightning speeds. Without this, even the fastest chip would get bottlenecked.
And when we say bottleneck, we mean the part of the system that slows everything else down, like the neck of a bottle limiting how fast water can pour out. TSMC is racing to double their CoWoS capacity so companies like NVIDIA can keep up with demand.
It's amazing how something as small as packaging can end up being the key to unlocking all that AI horsepower. Without these breakthroughs, all that CAPEX wouldn't deliver nearly as much value.
Looking back, TSMC's record quarter and eye-popping CAPEX plan tell us a lot about where the tech world thinks AI is headed. For now, it feels less like a bubble about to burst and more like a boom that still has legs.
And those business English terms, capex, gross margin, take or pay, and even bottleneck, they're showing up everywhere in financial news. Understanding them gives you real insight into how companies like TSMC shape the market.
Absolutely. If our listeners want to keep up with the next big wave in tech and sound like pros in meetings, these are the phrases to watch for. And as always, we'll keep breaking them down.
Thanks for joining us on Tech Talk English. Don't miss the show notes for more details, and we'll see you next time.
Bye, everyone. Have a great week exploring the language of the future.